Welcome to Massive Passive Cash Flow, the podcast that guides professionals to financial prosperity. Join our community and let's start building your wealth. Here's your host, Gary Wilson.
Hello, this is Gary Wilson, and welcome to the Massive Passive Cash Flow podcast. Good to see you. Engineers, dentists, business owners, professionals from 50 plus countries now. It's pretty awesome. Oh, by the way, a lot of real estate agents are chiming in too. So welcome aboard to all the realtors out there. I've got my license too in 3 different states actually. So, in any case, pay attention to today's podcast. Daniel Johnson's on board. Who I'm introducing him in a second, and it's kind of an interesting subject. It has to do with financial planning and real estate, which is unique, and I'll tell you a little bit more about that in a minute. But for those of you who are kind of new, if you could go ahead and subscribe. The podcast was on a number of different 30 some odd channels, including, iTunes, iHeartRadio, all the biggies, Yahoo and all that, and Google and Apple and everything. So also, this is really important. The team, there's a team called Global Investor Agent Team. These are agents who focus on real estate investors, folks just like you and I. They're trained to work with us. They're not regular agents, okay? These are highly specialized. They're not in the commercial world, they're in the residential world. So this is like for you buying duplexes and fourplexes and flipping homes and, smaller properties. We do have 6 or 7 commercial agents on the team that do some big stuff. 700 units and a $40 million island, things like that. But for most of us, we're in the range of 2 to 4 units and flipping. Well, these guys are certified to work with us. There's only one place they can go to get that. And I know that because I own that too. Okay. So take a look at that. It's free, by the way. It doesn't cost you a dime. If you want to go to the website, realestatewithgarywilson.com, click on members area. If you're a member, you know what to do. If you're not a member, you go to the I'm not a member section and you can get a free look for 30 days, get all kinds of free books and everything like that. But the community site that houses all of the investor agents, they all have profiles. You can't miss them because they're only ones that have a teardrop profile. Click on them. They're in 24 states now, okay, including Canada, by the way. So that would be 24 states in a foreign country. And you work them. I'm telling you, you need a valuable people on your team, and this is probably the most important people you have on your team. So in any case, without further ado, let's get back to today's subject. One of my favorite clients of all time is a financial planner, and I had to change the names to protect the innocent, but essentially he was a managing director for UBS Financial and ended up buying a lot of properties with me. And he remember him telling me, I can't use his name, can't tell anybody about it, because he'd get clobbered, right? That they found out he was buying real estate and he's in UBS Financial. Well, the reality is there's some really neat guys out there like Daniel Johnson that you need to work with because they're not afraid of real estate. In fact, they participate. And Daniel is one of the rare breed. So without further ado, Daniel, hey, welcome aboard, man. I appreciate you taking your valuable time to do this. I know you're successful and I know you're busy. So I know this is time precious to you,
Thanks, Gary. I'm really thankful for being here, a part of this, and look forward to just talking to your audience here today about some things they might want to be thinking about and looking at as they're continuing to invest in real estate.
Well, I appreciate that. And I could do the usual introduction, but what I thought was in this case, if you could do me a favor and everybody a favor, just paint a picture of Daniel Johnson for everybody. If you need to go back a little bit, to you were born in a log cabin in the woods or something like that. That's okay, but let people know who you are and how you got here. And I think that'd be a better job than me reading off a script. And then what we can do is get into some case studies, some knowledge-based discussion, because the audience here, Daniel, is probably the ideal people who want to listen to and learn from you. So
absolutely.
In any case, if you could, paint that picture for us and we'll get going,
Sure. So, I've been both a real estate investor and a financial planner. It combined about 10 years now. I actually bought my first investment property in 2007, right before the crash, and still own it today. Still a great property, held it through, but really in the interim, from 2007 until about actually this year, I worked in finance, worked in banking, also worked in financial planning. So for the past 8 years, worked for about a large registered investment advisory company, and they manage about $3.5 billion. Great company. But the one thing that I learned with working with about 100 different households was that there was really a big, huge gap in the market for folks that were interested in real estate, but also wanted to get good quality financial advice. And the reason being is that in the financial planning industry, there's a little bit of a kind of a push and pull in the way that a financial advisor typically gets paid. The way they get compensated is based on assets under management. That's the typical way. And the fact that if somebody wants to invest in real estate, most of the time they're pulling money out of the portfolio that a financial planner or financial advisor is managing in order to make that investment.
Yeah.
So I saw that kind of opportunity in the market and decided earlier this year to start my own registered investment advisory firm and to start working nearly exclusively with real estate investors on the financial planning side, also doing investment management, but primarily just helping them with financial planning.
Yeah. Well, I tell you what, you're definitely what we call a vital resource. I mean, you're a rare breed that you actually do that and can go back and forth there and sort of play both sides of the fence, so to speak. And what's interesting is, I don't know how many times I've mentioned this, probably not as much as I should, but I used to be in banking years ago and worked on mergers and acquisitions and learned a lot about money from the banking perspective. And one of the things I learned is, in terms of business and money, who's at the top of the food chain? It's the banks, so it taught me a lot. I also learned how to manage and everything. But what I realized is a lot of folks were very one-sided. And like you said, particularly on the financial planning side, they didn't really deal with investing in real estate. And yet a lot of real estate investors were told from their gurus, hey, just stick with real estate. It's safe. It's brick and mortar, and it doesn't have the risk of stocks and bonds and other commodities and things like that. But if you could do me a favor, let's talk about the financial planning industry history and its history of working with real estate investors, and then maybe plug yourself in and if we can go into some case studies and things like that.
Sure. Yeah. So, whenever you look at the financial planning industry as a whole, it kind of started and was born out of, selling investment products to folks. And that started obviously with broker dealers. And over time that has morphed into more of financial advice, where you're not necessarily a financial planner or financial advisor is not getting paid as much now to sell a product, to sell a mutual fund or a REIT or something like that. Those folks still do exist, but they're a much, much smaller piece of the pie now. Most folks, if you were to go to a large broker dealer, Merrill Lynch, JP Morgan, all the big names, in general, they're going to be assets under management based. Now, the way that I see things going into the future is more fixed fee. Basically, think of it this way. If you go and work with a CPA, the CPA is generally not going to say, well, the way that I'm going to be paid is based on how much you end up paying for taxes or something like that. They're going to say, well, my hourly fee is X dollars an hour, and therefore I'm going to get paid X dollars for our engagement. Mm-hmm. That is the way that I see the financial planning industry heading. Now, it may not go there anytime soon, but the way that I engage with my clients is on a fixed fee basis, meaning that they know exactly how much they're paying up front. And that's the way that they interact there. Now, as far as the financial planning industry, financial advice industry, and real estate, there's kind of been a little bit of a push and pull. And I really do like what you said about having, your assets diversified in a way that I really don't think it's wise for everyone to have 100% of their money in just the stock or bond market. I think it really is a great diversifier to own real estate in some manner, whether it is a single rental property, couple rental properties, or participating in syndications with really, well-seasoned investors. Yeah. Those are really important pieces of someone's financial puzzle that if you end up in a situation where you have a big crash in the real estate market, like we saw, you certainly, that was a very widespread crash across all asset classes for the most part. But in most cases, you want to have some diversification so you can pull from certain assets depending on what's happening in the world and the market.
Yeah. Well, I like that. I've loved the concept and the principle because I've lived it too. I mean, what's funny is before I got into real estate, like I said, I was in banking, and I used to go up to the corporate library every day at lunch with my brown bag lunch and study and read Barron's, Forbes, what's the old mutual fund rating guy, 5-star mutual.
Morningstar. Yeah. Morningstar.
Yeah. Mm-hmm. And just study. And it turns out I was doing really well. I mean, had an average return of 20% on my money. I thought, man, I'm beating the pros, So, but of course, there's a lot you don't know. Sometimes you don't know what you don't know. But I eventually got into real estate and realized, man, it's a completely different way to invest. It's very complementary. The two should definitely be done, in sync with each other. There's ways you can leverage and maybe take some of your capital from selling of tangible asset like real estate and invest it in a mutual fund, because you can invest in REITs too. REITs are a great way to invest, but maybe something that's like utility funds. And then, let's say you have that money going there and the dividends coming in and you're ready for another opportunity, you can pull that out. It's very liquid, So in any case, I just love the whole principle. And when you are diversified like that, you're not so much at the mercy of granted, 2007 through 11 was very unique, but I was going to say you're not so much at the mercy being stuck with one way of making money. That is risky, So now when it comes to the fee only, fixed fee planning versus what other folks are doing, can you elaborate on that a little bit, maybe, and maybe even if you got an example, that would be great too.
Sure. So historically, like I said, AUM, assets under management, is the way that most folks now charge. Now, let's just say you have $2 million with a financial advisor. Chances are they're going to charge somewhere in the neighborhood of about 1% of assets under management. So if they manage that $2 million, you pay somewhere around $20,000 a year. Mm-hmm. Now, that may or may not be a fair price for what they're providing for you. Mm-hmm. Only you and the financial planner involved can kind of determine that. However, whenever I enter into a relationship with a client, I'm looking at how much time do I anticipate I'm going to be spending with this client? How much ongoing support am I going to need to do? It's not necessarily based on how much money they have, because theoretically somebody could have $10 million and they're costing me very little in the way of time. If I talk to them for 30 minutes once a year, then that client is not really costing me a lot. Therefore, I can really probably charge them a lot less than someone else may charge. However, there's some folks that I work with that, need a lot of support, a lot of work, and they may end up being at a higher tier where the fees are going to be a little bit more. But in general, my clients pay me between $3,000 to $6,000 a year, fixed fee, not based on how much they have invested with me or with my company, Refocus Financial Planning. It's more based on their situation, their circumstances, how many investment properties they have, how complex is their situation. And so that's the approach that I believe into the future we're going to see, because it lines up a little bit more in the way that a lot of other professional services, like accountants, lawyers, folks like that charge for their fees. Yeah.
Because I know in the old days, when I say old days, back in the 80s when I first got started, my dad, my uncle, I still had, 3 of my 4 grandparents still alive. And, they used, I guess they were technically brokers, but they called themselves financial planners. And it was a percentage. And I remember thinking, one of those people was particularly doing quite well. We're, multi-million-dollar figures, but the amount of money that they were spending on fees, but they were as a percentage of their trades, it was actually a lot higher than $20,000. So I do agree for 2 reasons. Fixed fee is probably better in that you have more control over it. You know how much you're going to be spending. Number 2 is you're probably getting really good unbiased advice. It's not tied to a percentage of a sale for one particular mutual fund or a bond or a stock. It's just, this is what we recommend. And you're still paying the same flat fee, So
yeah. And because I am a real estate investor and I understand the power of real estate investing, I likely would not have been able to go out and start my own business if it were not for my own real estate portfolio that I built up over the last 10 years or so. And knowing that the cash flow behind real estate can really empower you to do other things. So if there's investors out there that are looking at their situation and trying to break through and understand how they can reach their goals, that's when a financial planner really is kind of at its best. A financial planner that's able to kind of distill the situation that a client has to understand their properties, to understand their investments, understand their goals, and to lay out a path to meet and reach those goals over the next 5, 10, 15, 20 years, whatever the time horizon looks like. That's where financial planners can really excel and to really, kind of drive a lot of value for folks that are trying to understand their situation and reach the next level. Yeah.
I'm glad you mentioned that, because it's, when it comes to real estate investors, I've been doing it for quite a long time, and I'm an investor myself, and I've also taken on some clients over the years, and some of them are pretty high net worth, and some started from scratch, literally like me, buying little duplexes and then moving into the 50, 60, 70, 80, 90 unit apartment complexes, things like that. And I didn't get there overnight. It was a process. But what I learned was one big thing. A lot of real estate agents don't understand real estate investors, and they're thinking, well, why would they buy this property if they're not even going to really cash flow when it's all said and done? I said, aha, here's the deal. You're thinking of them spending $1 million, but they actually only spent, 900,000. I mean, 100,000, and they financed 900,000. So they really only spent or invested 100,000. But 10 years later, they sold that same $1 million building for $2 million. So they turned 100,000 in cash into 1.1 million in cash in 10 years. The other 900,000 was borrowed. There's leverage. So they're looking at it as another asset class that grows in value, just like some stocks you buy strictly for appreciation. Some stocks you buy for cash flow. It's the same thing with real estate. And a financial planner is going to be able to see this and see what's good for the next year and what's good for the next 20 years, So I hope all your real estate agents are really listening to this and taking notes. Well, if you could, what are some of the financial planning blind spots then for real estate investors to be on the lookout for?
Yeah, I mean, I'm a big believer in I mean, we saw what happened during the financial crisis. Mm-hmm. We even saw what happened, during the most recent with this pandemic and what has happened to a lot of, whether it be long-term rental investors, short-term rental investors, commercial office space investors. You really have to be prepared and make sure that you have really good downside protection, that you have sufficient liquidity to weather the storm. Now, in March of 2020, not only was liquidity drying up in the financial markets, the stock market took a huge tumble. So that is, one of the biggest things that I believe is that you can almost never have too much cash. Obviously, for long-term investment purposes, you want to be deploying assets in an efficient way, and that's where working with a financial planner that can read the landscape, that can look at where everything is situated, is really, really powerful to be able to make sure that you have sufficient liquidity to cover your liabilities, the things that you have, outstanding for a sufficient amount of time. We saw in the financial crisis that was 3, 4, 5 years in some situations, sometimes more, depending on where you are investing. Yeah. In the most recent crisis, it was probably only about 6 months that you had kind of that liquidity crisis where it was hard to refinance properties, where it was hard to get funding. So that was a short-lived one, but you certainly would want to have that liquidity in that period of time. So that's kind of one of my biggest areas that I think blind spots for investors is just understanding where you're situated with your financial position spread across all your different assets that you have. Yeah. Yep.
Very good point. Now, one thing I want to ask you about is something that's popped up, we've always had it, but it's become more popular to talk about it in the last year or two or three, is like short-term rentals, nurse housing. So I currently have two students who are involved with short-term housing for traveling nurses. Mm-hmm. And I don't know all the details, but if you can kind of touch on that a little bit, because I think there's, when it comes to traditional rentals, there's all kinds of alternate strategies, same basic rental business, but the audience you're renting to could drive up your average rents by 2 or 3 times, Yeah. So if you don't mind, give us some insight on that,
Yeah. It's interesting because obviously short-term rental, Airbnb, kind of synonymous with each other now. VRBO has been around for a long time. Those came onto the scene and over the last, obviously 2 or 3, 4, 5 years, they've become increasingly popular. Mm-hmm. And as a result, if you had gotten into it 4 years ago, the returns were probably incredible. Probably the sweet spot was 2 to 3 years ago. Now what we're seeing is with the prices appreciating so much in a lot of markets, it's hard to get into those markets, to buy the properties, to furnish them, to get the ball rolling. However, if you already have a property and it's in a good spot for a destination for whatever reason, it might be a good idea to take a look at that property to see if it's a long-term rental currently or an underutilized property. You may look at it to say, is there a higher and better use? That's obviously what all real estate is kind of circled around, is if you have a piece of land, what can you develop on it that's highest and best use? If you have a home, what's highest and best use? That's where Airbnb comes into play. And if it's legal, zoned, and all those good things, you might be able to increase your operating income from that. Now, of course, it comes with a little bit more work. You may be able to find a property manager that can manage it for you and still receive those higher returns. Nurse housing, I love because it kind of sits in the sweet spot. It can still be self-managed pretty well with very little kind of time and effort. But what you essentially get is you get traveling nurses that come in for 3 to 4 months at a time. So you end up with 3 to 4 tenants a year. Theoretically, sometimes they extend their contracts and you end up with only 1 or 2 tenants a year. But what happens is you're providing a fully furnished place that has all utilities paid, that has, internet supplied. And the great thing is that you have high quality tenants. You have nurses, literally people that you would want to be in a property because they may save somebody's life, right next door or something like that. You have that person living in your home, and you have great confidence that they're going to take good care of it. And the fantastic thing is that they're great tenants, and you can get above market rents in most situations than you could get with a long-term tenant. You have to run the numbers in all these situations, but I've had a number of nurses, and they've all been fantastic tenants over the last year or two.
Yeah, My brother was a traveling nurse at one point, and they please don't take this the wrong way, traveling nurses, but you find out in your assignments they generally give you the hardest work because you're the traveling nurse, and the regular full-time employee nurses have the easier work. But here's what I'm getting to: even traditional nurses that I've run into in my own rentals always were excellent tenants because they work like crazy, 12-hour shifts, and all they want to do is come home and just crash. You don't have problems with wild parties and people bringing over their girlfriends and boyfriends and all this kind of stuff. And they make good money. They're great tenants, So, so I just like them in general. But plus, in my family of the 5 siblings, 3 are nurses. So, so they'll be listening. So Kelly, Charlie, and Carol, we all love our nurses, right? So
absolutely.
My cousin Krista too. I can't forget cousin Krista, but. In any case, hey, so we're getting closer, but I want to ask a few more questions if it's okay. So when it comes to timing, like everybody, this is one of the strangest markets we've seen. We have, multiple offers, people outbidding each other, going way above list price, mostly on traditional homes, but even on the multi-units and things like that. And it feels like you're at the end of that particular peak, and then you're going to go into the downfall. to me, I'm not worried about it because this will be my fifth one since I started investing. So it's not like I don't care anymore, but I've been through it enough times. Like the last one is when I made most of my money. I mean, the world seemed like, if you watch the news, it was falling apart, but we were doing really well. Mm-hmm. So with this one coming on, I'm trying to get everybody prepared to be ready for it, to not be surprised by it and shocked by it. The only wild card is we don't know, with the government, for lack of better terms, they're printing money like it's monopoly money. They're just, for the first time ever, and I'm a big historian, I love history. I don't care how bad things have gotten in the past, like in the Great Depression, we still didn't hand out money. We're handing out money like it's monopoly money. So what are the long-term effects? I don't know, but I wanted to throw that out to you and see, as far as timing goes, what are your, and nobody will hold you to this, Daniel, so don't worry, we're not going to, well, Daniel told me, because I know nobody else will crystal ball. In the last one, the last recession, people called for it 5 years before it actually hit. So what are your thoughts on that when it comes to real estate and financial planning and all that,
Yeah, I think the main thing is you have to be focused and have a game plan in mind. Anytime that you're entering into a purchase transaction on a property, you have to know, what your metrics are. You have to know what your kind of, because one thing that is probably under thought about right now is the fact that if you find a really good deal, the fact is you might be able to end up making, your expected return over 5 years, you might end up making it in just 1 year. So you have to also have an exit plan strategy that, you may be thinking, I'm getting into this at the kind of the tail end of the market. I'm prepared for a downturn. However, what happens if you turn a property around and it's in really good operating condition, and then you get an offer because the market continues to be hot, that it's even higher, and then you might even end up, say, doubling your money on a property? You have to be prepared to figure out, am I going to take an exit now, or or am I going to wait another 5 years, or whatever the case is? So it's difficult, because I think you can even look back 3 years and say, oh, the market is topping out and prices are getting too rich and too high. I think the biggest thing is whether or not, in the long run, whether or not wages and the ability to pay rents will follow with prices. And if not, certainly there's going to be some kind of, there's got to be a pressure release at some point in time.
Right.
I mean, who knows? Once again, it's one of those things you have to have a caveat on that. We may end up in a place where assets continue to rise in price, with cash flows continuing to drop and drop and drop. And it's just really based on so much supply of capital and so few assets to purchase. It just continues to drive the prices up. Yeah. Who knows what that looks like in the long run? But I would say, just be diligent on, as you're finding a deal and the numbers work based on conservative underwriting. Yeah. That go into it eyes wide open, but then also be prepared to hopefully have a really good opportunistic exit in a shorter period of time, because the market is still continuing to move very quickly.
Yeah. Yeah. Hey, one more question. Do you mind if we do?
Sure.
One more?
Yeah.
How does like geography, proximity play into this? I mean, like in the last recession, Phoenix, most of Florida, some of the bigger LA, California markets like LA really dropped hard, but then they came back really fast too. In other markets, like the Rust Belt, Pittsburgh, and some of those were kind of the curve was real low and slow. And how do you does that play a factor in financial planning? I guess particularly when it really comes to real estate and financial planning, or what are your thoughts on that? For example, Tidewater, Virginia, Hampton Roads, people call that the seven cities, Virginia Beach, Norfolk, was slow to the party. They didn't really start to get hit till around 2010, 2 years after everything else started dropping. So I don't know. How do you know that kind of, or is there a way to know that or predict that kind of thing,
Well, would it be any surprise that a financial planner would say diversification is key? I think at the end of the day, you can roll the dice and you can invest all in one place. Mm-hmm. However, you're going to increase the likelihood of risk on having a certain market demographic that hurts you. Now, I think what you'll probably see with during the financial crisis, the ones that were were most hit were likely those that were over leveraged markets with prices that were driven mainly by kind of a really rapidly increasing, income base. And when that income base slowed down, it had a kind of a ripple effect. Now, I'm not going to write off the tier one cities. I'm not going to say that they're gone and dying and dead. I think they're going to continue to grow. But I do really like tier two and kind of, tertiary cities that my city of Winston-Salem, North Carolina is kind of a slow pace growing city that is an attractive place to raise families. I think with the rotation of generations, more millennials are now starting families and they're wanting to settle down and buy a home, which may not be realistic for them in Brooklyn. And therefore, they're going to look for somewhere else to do that. So I think diversification across the country and having properties in different areas of the country is a really, really smart thing to do as an investor.
Well, I appreciate you saying that because I agree fully. When I first started investing, it was one area. It was Tidewater, and then I moved to Pittsburgh and did a lot of investing there. But I was always so centralized until later on I joined a mastermind group and realized I can invest anywhere because I know people now most places. And by the way, for all the listeners, another huge advantage of going to that map, the forum where all of our investor agents are shown to you. Use that because investors more today than ever before are investing in multiple areas. People from Canada, they're not just investing in Florida, they're investing in Texas and Utah and Georgia. It's smart planning to invest in multiple locations. And there's a lot of data out there that wasn't there before that you can use to help you determine where some of those good areas are with multiple industries so they're more stable. Steady growth rate, population increase, things like that. Those are all important factors. Well, now it's available to us. And now that we have these trained, certified investor agents, they know this stuff. They're taught this, and they can serve you in all these multiple locations. So in any case, hey, Daniel, I really appreciate you taking your precious time to do this. Again, I know you're really successful, and I know this was a big win for us to get you on board. So how can people? We've got a lot of professionals on board here, business owners, dentists, engineers owning consulting, pilots. But what's the best way to get a hold of you? Is a website, email, phone number, things like that. If you can fill us in, that'd be great.
Yeah, absolutely. If I offer just a get to know you introductory call, no obligation kind of thing, 30-minute call. You can find all the information that you need on my website, which is refocusfp.com. So refocusfinancialplanning.com. My email address is daniel@refocusfp.com. And you can also reach me on anywhere on that website, and you can find me on LinkedIn. I'm happy to connect anywhere with any of your followers that just maybe need a second look at their situation, need somebody to look over the shoulder and make sure things are good, or maybe somebody who just says, hey, look, I want my financial planner, my financial advisor to be real estate friendly and looking to make that change.
Well, I appreciate that. So everybody, refocusfp.com. Daniel Johnson's your guy, and he's in a great place, Winston-Salem, North Carolina. I know my uncle and aunt lived there for a while, and great place for basketball. If you love basketball,
Tobacco Road.
Oh, unbelievable! Yeah, we used to drive down to watch you guys play basketball. Was where our school was not. We weren't anywhere close to top tier. So,
sure.
But in any case, hey Daniel, this has been a lot of fun. I hope we can get you back again. And for everybody listening, we'll see you next week. Take care. God bless you and your families. Make sure you subscribe to the podcast, iTunes, iHeartRadio. There's a bunch of them out there, different channels. And go to the website. Just go to the members area, realestatewithgarywilson.com. Grab the books. There's all kinds of stuff you can get for free. You don't have to spend any money right now. Go to the YouTube channel, Real Estate with Gary Wilson YouTube channel. There's literally 16 playlists with subjects all related to real estate. So have fun at it. God bless you and your families. Daniel, you too. God bless you and your family. And we'll see you all on the next podcast.
Thanks for listening to this episode of Massive Passive Cash Flow. Be sure to go to realestatewithgarywilson.com to join our community and start building wealth today.